Hello everybody, welcome back. I'll make a nice quick video this morning. Got stuff to do, places to be. But if you want to join the live stream for the Patreon members, links in the description below. We'll be doing that tonight. Right, so Bitcoin still hanging around the 43,000, which is fine actually. If bulls want to make another run, they pretty much have to do it at this level, which is, well, we'll call it effectively like 42,900 thereabouts. You know, staying above all these moving averages on this 4 hourly, it would be a good look for it. I have to say, it's not particularly bad. But you know, literally, yeah, we've been up and down all these areas these last few days, and there has been reasons for that outside of the chart. So FOMC pushed it down. We managed to spring back up. There is some kind of trend line being developed on a sort of a diagonal scenario. We've also got, I suppose, supports on a diagonal scenario. You could look at this as some kind of giant symmetrical triangle, I suppose, in one way or another. Personally, I'll be focused mostly on the old moving averages and Bollinger Band itself, which basically leaves us to what we said just a second ago, which is really if above 43,000, we'll call it 42,900. Okay. Below there, then on the short-term time frames, we've got 42,300. It's where our golden cross would be retested. So we actually managed to get the golden cross now. So wrecked, bounced, confirmed. Now we want to see if it's valid, which would mean another retest of these levels. If you get a retest of here, it's okay to expect a bounce from it. That's the more likely scenario. But if we fail to get supported on here and we do close below there on a 4 hourly, it's not a good look, because a failed golden cross, just like a failed death cross, is pretty bad. Now, I am one for continuation of the overall downtrend on the higher term time frames. You know that. So we looked at the monthly being hot, the weekly being hot, the daily still okay. So you know, this is where I suppose it starts to get really tricky, because you know, the 4 hourly to the dailies suggest it's actually not all as bad as I've made it out to be, or it doesn't appear like that on face value. The 4 hourly, like we've said, has already confirmed a golden cross. We're waiting to see a retest of that and hopefully a positive response for further upside. The daily is already above all moving averages and continuing to remain relatively strong. The MACD sort of pushing up towards the 0 point. It would only take a couple of days really to get above that at this current price action. So that would normally give it a little extra boost to go back up. But I'm still one of this has consolidated long enough, and I mean this has not consolidated for long enough, and we do want to come down further. So the line in the sand on the daily would be closures obviously below this Bollinger Band and pretty much all the moving averages of significance. That takes us to basically 42,000 really. Closures below 42,000, we'll call it 41,900. That will add more weight to the idea that we're going to come back down to the 38 and below. So, I mean, without, you know, beating around the bush, as I like to say, we'll have a look at the 3 daily just very briefly. So don't normally look at that. So the 3 daily is definitely a bit sketchier as well. So this is what I'm talking about. I mean, I haven't even looked at the 3 daily, but the 3 day is basically saying we need to close pretty much where we are. Much lower than this is already starting to push us down further. Obviously, we've looked at the weekly many times, and it's the weekly that suggests further consolidation anyway. Yeah, I think it's only just picking up pace. And yesterday, we did have a look at the monthly, and the monthly is what scared us. We were like, holy shiznizzle, that is high. We shouldn't be at this peak, and we shouldn't be up here until the end of a cycle, surely. We're not at the end of a cycle, are we? But look, this is slightly different this time round. ETF is live, is trading, is doing stuff. You know, it's real. The halving is creeping around the corner. That might be keeping the price up as the noobs fail to recognise that it's a buy the rumour, sell the news. Look, I still hold plenty of Bitcoin. Still hold plenty of crypto. I always say this. There's differences in hodl and trading. I'm unwilling to trade this area. Not really a trading environment for me. Little trades here, little trades there, but not going hard and heavy. I really am. My bias is for a deeper consolidation over this year, and then I'll sort of kick it back in. But yeah, hodling's fine. You know, I bought loads of Bitcoin at 21,500, holding it. You know, bought all the chain link at like $6. You know, but I bought loads of stuff. Most of it's okay still. Some of it's not, but most of it is. That's the beauty of a hodl, right? You allocate at the beginning of a cycle, you exit at the end of a cycle, and whatever happens in between is just between you and the tax man, really. So, right, let's leave it there. There's nothing much more to say. Personally, this very second in time does favour further upside, absolutely. 44,000 again being the major resistance, obviously. Anything above that, I would be looking to scale out if I were already in any positions, long positions or spot positions. And again, closures below 40, we'll call it 42,000, will spell the upper 38 without too much of a problem. Right, nice and boring. Thanks for watching. Hopefully I'll see you on the live stream tonight while I've digested the coffee that I've had now. Hasn't really quite touched the sides. Right, thanks for watching. Take it easy.